Have you ever thought that patterns are only consist of drawings? Or have you ever tried to draw bat, Gartley, butterfly or others but you couldn't determine where to start or couldn't become sure if your drawing is valid or not on your backtests or on real market? Do you think patterns are not that successful at all? I might change your ideas about patterns during this video. Cause today I'm gonna show you how to draw patterns correctly with exact entry and stop loss points, and also I'm gonna show you how to determine the pattern is valid or not by using Fibonacci tool. Here is the first one. Bat pattern is one of the favorite patterns among the professional traders with its high risk-reward ratio, cause you can enter a position with bat pattern by using considerably short stop-loss level, and that brings you a higher risk-reward ratio than most of the other patterns. Let's start drawing the bat pattern with a swing. Here is Q and here is A. Almost all patterns should start with a swing, cause breaking a level means a must on success of all patterns. As you see here, X breaks the Q while reaching to A. If you think that your pattern trading positions fail most of the time and can't realize what the reason is, you probably missed a really important detail that if the pattern doesn't break a level at the beginning, like here from X to A, its success rate decreases considerably. After a swing from X to A, we expect a retracement to the B point, and we can determine the point of B by using the Fibonacci tool. We implement Fibonacci retracement from X to A, and here our first rule for B point. Price should reach at least minimum 0.5 Fibonacci level, but shouldn't touch the level 0.618. If it touches even with a candle wick, pattern becomes invalid. We expect the retracement to reach at least 0.5 Fibonacci level. If it goes lower than this without touching 0.618, it's not a big deal. For the next step, we expect a move from B to C, and here are the rules. When we implement the Fibonacci from A to B, point C should be at least 0.382 Fibonacci level. It might be higher than this level, but shouldn't touch the level 0.886. In most bat pattern videos, I come across with a teaching that C might come close to the A, but backtests prove that the success rate of the pattern declines when this happens. So I prefer not to trade this kind of bad pattern when the price hits even with a candle wick to the 0.886 level of Fibonacci from A to B. For the entry point of bad pattern, we one more time implement Fibonacci retracement, but this time from X to A, and our entry point is 0.886 of this Fibonacci. I prefer to put my stop loss slightly below the X to a safer stop loss point, and the target is preferable, but I prefer to take my first profit at level of C, or A is also good point for taking profit. Gartley pattern is very similar to bat pattern, and we use almost same rules, but the Fibonacci levels we use for Gartley are a bit different from bat pattern. But when it comes to the breaking a level rule while starting is a must one more time. I must remind that, except butterfly pattern, this breaking level rule has a lot to do with the success rate of these patterns. So while we are looking for valid patterns during our backtests or on real market charts, we definitely shouldn't miss this detail, otherwise our success rate and backtest results might be wrong. Like bat pattern, we expect a swing from X to A by breaking the Q level, and point B is minimum 0.618 Fibonacci retracement level of X to A. An important detail here, the price might pass slightly above or below to 0.618, but shouldn't touch the 0.786, otherwise the pattern becomes invalid. These numbers might be confusing at first, but these are the golden numbers to execute successful trade positions. To memorize these numbers might look really hard at first look, but these numbers are really precious for the success of these patterns, so I can advise you to take a note of these numbers really well. I'm sure memorizing them by doing some backtesting is not that hard to do. Also, these numbers and rules might be a bit different from other standard pattern narrations, but please remember that I only share tips of professional traders' rules and patterns in my video. So next level to follow is C. We implement Fibonacci retracement from A to B, and 0.618 is our C. One more time, 0.618 is the minimum price level, so the price might surpass that price but shouldn't touch 0.886, even with a candle wick. And we can determine the point's price level with Fibonacci, and our entry point is 0.272. Normally we use Fibonacci extension to find this point, but I changed my Fibonacci retracement tool settings and I can use one Fibonacci instead of using two. If you need that, here is my Fibonacci settings, you can take snapshots. We can execute the position with a candle signal there, and our stop loss is slightly below the X, and our target might be C or A level. Choosing the target C or A is all about your preference, but price might get a reaction from C, and this might annoy you. So if you are not that experienced trader, I strongly advise you to get your full profit at the price level of C. Our next pattern is Cypher. We categorize Cypher pattern as double swing pattern. It starts with a swing from X to A, then a retracement to B is expected. And again, we can calculate this retracement with Fibonacci, and here are the rules of the retracement. We use the Fibonacci from X to A. Should reach at least to 0.382 Fibonacci level, can touch to 0.618 or even pass it, but the price shouldn't close under this level. I mean, it can surpass the 0.618, but the price should close below 0.618 Fibonacci level. And lastly, the price shouldn't touch 0.768 even with candles or wicks. After the first swing, price creates a second swing. As you remember, breaking a level is a must and most important rule of these patterns, but this time either first or second swing might be the breaker. It doesn't matter which swings breaks an important level here. I mean, the breaker swing might be either A or C, doesn't matter. If one of the swing A or C break the Q point, that is enough for us to accept the pattern as valid one. Point C can be calculated with a Fibonacci extension, but as you remember, I use different setup to determine the positions of the price level more easily, and here same Fibonacci from X to A and the extension of its 0.272. The extension point can touch to 0.414 but cannot touch 0.618 even with a candle wick. For the entry point, we use Fibonacci from X to C, and retracement of 0.786 is our entry point. We can execute our order with a candle signal here. Our stop loss will be slightly below the X, but this time we don't target the level C for profit. Instead, we arrange our take profit target as 1:2 or 1:3 risk reward ratio of our stop loss point. Our next pattern is butterfly. Butterfly pattern mostly coincides at the last phases of a big trend. An important stop hunt accompanies this pattern most of the time. Unlike other patterns I explained in this video, breaking an important price level is not a must for butterfly pattern. So we don't look for a Q level to be broken. We expect a movement from X to A and a retracement to the B level, but this time we expect a deeper retracement than other patterns. This retracement can be calculated with a Fibonacci, and our B point is 0.786. And for this pattern, our rule is B cannot reach to access price level, otherwise it turns out to a double bottom and the pattern becomes invalid. For C, we implement the Fibonacci from A to B, and Fibonacci retracement price reached to minimum 0.382. Of course, a bit higher is also possible, but shouldn't reach or touch to 0.886 level. And finally, pattern is completed with a move to D and can be calculated with Fibonacci extension this time. And level for this calculation is 0.272 from X to A. Our entry point is 0.272. I must remind that we don't execute positions with a limit order in these patterns. We prefer to use signals instead of limit orders. Another different and a bit weird thing about butterfly pattern is the level D is below the level X. And this is not a position that we like to see, cause it might seem as a breaking level, it might misguide you. That's why we prefer not to execute a position to a butterfly pattern without seeing a stop hunt below the level 0.272. Your target might be quite long with butterfly pattern if you coincide it at trend reversal point, and that's because point D is below the point X. We should arrange our stop loss level according to our take profit area. And our final pattern is Quasimodo pattern, which is my favorite. In my smart money pattern video, I mentioned about Quasimodo pattern and told there that smart money pattern and Quasimodo patterns are by far my best and mostly used patterns, and promised to prepare another video about it. So here are the features of Quasimodo pattern. It resembles head and shoulders pattern. This is left shoulder and this is head. For the entry point, we use potential right shoulder. I will explain this on drawing. Quasimodo pattern enables for an earlier entry, so it has a high risk-reward ratio. As you see here, we have a downtrend here, and the movement from C to B breaks this level. And I have an important tip for you here. The candle that breaks A level must be a really big candle. Actually, the biggest one of the movement from C to B. And our entry point, as I said before, the same level with left shoulder, I mean X level. We put our stop loss below the C level and our target is B. I tried to explain all these very successful patterns as easy as possible. Thanks for watching till the end, I appreciate it.